Good morning, guys. Welcome to the Camp Financial Update for July 28th, 2016. So I'm looking at the different indexes this morning. I'm thinking, what's going on? And I've come to the conclusion that the Dow and the S&P need some sort of a catalyst to move. I mean, they're pretty much up a little bit here, they drop a little bit the next day, they go back up a little bit the next day. Utilities are up one day while services are down, and then the next day basic materials and utilities go up and consumer goods go down and the financials go up. It's, they're all kind of counterbalancing each other right now, right? I think what we're seeing out there is everybody's gotten comfortable with the level that the S&P's at. Now it's just a matter of trading in and out and finding the pieces within the S&P or the Dow that are going to pop. And you notice I've only said the S&P and the Dow, and that's because the NASDAQ, well, the NASDAQ's kind of got it figured out right now, right? Facebook, blowout numbers. Apple, nobody expected numbers like that. I mean, that's before they even put out the iPhone 7. I haven't heard anything yet that says that the iPhone 7 is going to be this new, just game changer, other than more than just an iteration of what it's already been. But yeah, it's just the tech sector, for whatever reason right now, and they've always kind of led since they since it popped in 2001, and then obviously they got crushed, but this new tech sector really seems to be driving the markets. So it's pretty interesting stuff. I think you always got to keep an eye out, got to watch what else is going on in the world to understand, maybe is there something else that's going to pass tech, or is something else going to become tech in the future. But with that said, I think it was yesterday was a pretty telling day again, as both the Dow, so the Dow took off downward and ended up at one point in time was down almost 100 points, and then just kind of rallied back from 11 o'clock on to get back to just down 0.1%. S&P 500, it was down 6 points or so. Same thing, kind of around 11 o'clock, we seen it start to run back up by 2. It went positive, and then it ended up running up 0.16%, and the NASDAQ up 0.3%. So looking at the heat map, obviously tech, consumer goods, because Apple's technically a consumer goods company. Consumer goods performed pretty well. Philip Morris had a good day. Molson Coors, TAP, performed well. The brewers all performed pretty well, actually. Obviously Facebook, I've already mentioned TripAdvisor had a good day. The major independent oils were both down. Exxon, Chevron. Independent oil and gas, kind of a mixed thing. Pretty much all oil and gas was kind of mixed, and utilities were pretty much up. Not much. I mean, most of them were pretty. The S&P was pretty flat. So obviously most of these were pretty flat as well. There wasn't any big blowouts there. Auto manufacturers got hammered. Ford down 8%. GM down 3.22%, which concerns me a little bit about a stock that I've been contemplating doing a write-up about when those two go down. That makes me fearful for the auto parts manufacturers, obviously, that sell to them. So grocery stores down, Kroger down 3.5%, Whole Foods down 9%. I mean, those are things. Yeah, so here we go with I'm looking at the consumer goods auto parts section now. The three big ones, BorgWarner down 5%, Delphi down 2.25%. I mean, they kind of followed suit with the auto manufacturers being down. So let's pop back over. Let's give us the real skinny on who was the best and who was the worst yesterday. And we can take a look and see, were the best and worst performers, were they the ones that put out reports yesterday? That Whole Foods, like I said, down 9%. They were downgraded just a couple days ago to a sell by Goldman Sachs. It's kind of interesting. In the last 3 days, there's been, since July 25th, there's been 3 changes from the analysts. So Macquarie upgraded it from neutral to outperform. Whoops, they missed that one. That was on the 25th. Goldman downgrade from neutral to sell. So if people were following the Goldman analyst, they nailed that, because he put that out on the 26th. If you sold, you saved yourself, 9-10% pretty much. And then right after that, Deutsche Bank reiterated a hold on it as of yesterday. So let's take a look at Whole Foods. I'm sure they must have. What did they say? So earnings were in line, and their outlook was subdued. So, like I said the other day, outlook is more important than earnings in this market. If you meet earnings, that's fine. People expect that. If you then say, well, we're probably gonna sell off a little bit, or our sales aren't going to be as good in the next quarter, people are going to jump ship pretty quick. So, like I said, other ones down. Ford, I know they had earnings yesterday. BorgWarner, Murphy Oil, and Extra Space Storage, which is an industrial real estate investment trust, were all down yesterday. They were down so the Extra Space was down 4.5% to, obviously, Whole Foods we mentioned down about 9 points. So best performers yesterday: the XL Group, property and casualty insurer, up a couple bucks. Varian Medical Systems, TAP, Pioneer Natural Resources, and O'Reilly Automotive. So there's your auto parts stores, which are interesting enough. So the other auto parts manufacturers, when the parts manufacturers will pretty much follow suit with the auto manufacturers. I mean, the auto parts stores, though, a lot of times you will see them go up while the autos go down. People, when they're fearful, they stop buying cars, they save their money, so they go the cheaper route and they go to the parts store and they get the parts they need to fix their car up. So kind of a different correlation with those. But yeah, XL Group up 6.5%, Varian was 6.25%, Molson was 5%, Pioneer 4.5%, and O'Reilly Automotive was up 4%. Now let's pop over to the Dow real quick. Try and get this done here in the next couple minutes, so we're not dragging it out real long. Worst performers in the Dow: Boeing, Caterpillar, Verizon, Exxon, and Cisco. I venture to say a lot of the Boeing and Caterpillar was probably based on profit taking. Caterpillar's had a huge run. I mean, it's up almost 20% since toward the end of June. So I'm sure there's some profit taking going on there. I mean, heck, it popped from $79 to $84 over the last 2 days. So I wouldn't be too concerned about that. Verizon is dropped back down, and I think it's kind of finding a range there. Exxon, obviously a big sell-off that's been going on in the oils for about half a month or so. And then Cisco, I don't know if they reduce or put anything out on earnings yet or not. That'll be one I have to look at a little deeper. Obviously, then the top performers yesterday: Apple, Home Depot, Travelers, Visa, and United Health Group. So with Travelers up, XL Catlin up, there must have been, to look at the I'd say look into the property and casualty insurers, see who's putting numbers out and what kind of numbers are. But definitely looks like outlook is up for the property and casualty insurers. Apple, again, obviously earnings blowout a couple days ago, popped up, and then now they're just it sold off at the end of the day and tore that pop up, and then yesterday it basically just reattained the highs that it had hit the day before. So that's pretty much it for today, guys. Let me take a look. So we had 10 advancers, 20 decliners in the Dow, which is another, it's starting to come out that way a lot, it looks like, recently, which to me is kind of bearish when we start to see, even when the top ones are going up and they can pretty much balance out the Dow, when a significant amount of the Dow is declining and it's still staying flat, that starts to make me a little concerned about overall when the market might start to turn and we might go into a bearish mode. Obviously this bull market's been running for quite a few years now. I mean, realistically, it's pretty much been a bull market since 2009. So we're looking at a long-term bull market here. So I would just tell you with that, be cautious. Make sure you're picking companies that make sense for your portfolios. And if you need dividend yield like most people are looking for, I would look for the best performers in each sector that's paying the dividend already. So that's it for today, guys. If you have any questions, send me an email, chrism@campfinancial.net. You can leave me a message here on YouTube, Facebook, or Twitter @cmillick. Thanks, guys, and we will see you later.